Hello, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thank you once again for tuning in and watching. I have a few things to cover this week, from the CREA stats, the national statistics, average prices, what's been happening in the market, and how July is playing out so far. But first, I want to start with the Bank of Canada rate decision last week. I'm not going to get into the details. We already know the details. It's 5% now. But I want to talk about the press conference right after. So this first question from a Reuters reporter summarizes the whole market this year and kind of the spring market, how the prices went up and how we got here. And anyway, let's listen to the question. We're not going to wait for the answer, but listen to the question. You'll see what I mean.
Let me ask this one. A few months ago, in January, you paused rates, and when you did, you indicated that it would be a pause. And since then, we've seen the housing market recover. And you said today in the statement that it's adding to inflation. Do you think that it was a mistake in your messaging in January to say that? Should you not have maybe just said, we're not raising rates today, but we're going to keep watching things?
And the rest of the news conference really didn't matter after that point. He answered it with whatever he could answer it with, but the question, like I said, was a lot better than the answer. And now let's see how this translates into recent stats. This is a mid-month update from July 17th, from July 1st to the 17th. And this is how the numbers are playing out. Not too well for the sellers, better for the buyers, but not considering interest rates. But anyway, here they are. So first, starting with the GTA, they're down 43,000 so far for the first 17 days in July from the previous month, June. And you can see it's actually lower so far than April. So pretty much half of the spring gains, or maybe even more than half, have been wiped out in the Greater Toronto area. And the losses look very similar in the 20 boards surrounding the GTA for July. They're down, $36,000. Big loss in July so far. The only bigger move was in January to February, and they went up 38,000 there, if my math is correct. And we're already down 36,000, and it's only 17 days into July. So I don't see the market making a recovery before the end of July. So I'm guessing this trend, or this downward trend, is going to continue. Moving on to the CREA national stats, they were just released on Friday. And you can see their title here: Canadian home sales showing signs of stabilization in June. Home sales recorded over Canadian MLS systems posted a 1.5% increase between May and June 2023, smaller increase than in April and May. Sales were up in June in a little over half of all local markets, with gains in British Columbia and Alberta offsetting fewer sales in the Greater Toronto area. The actual, not seasonally adjusted number of transactions in June 2023 came in at 4.7% above June 2022. This was the largest year-over-year national sales increase in 2 years. And you can see there, looking at the monthly home sales chart and the 10-year moving average, it is almost back. It's still below the average, but it is creeping back up. I don't know if it looks like it's making a turn, though. We'll see if it gets there. I'm guessing it should. People still need to buy homes, so I'm sure we'll see that return to normal levels sooner or later. Housing markets appear to be stabilizing heading into the summer, following some big ups and downs over the last year, said Larry Surqua, chair of CREA. Most importantly, the recovery in new listings over the last few months will give buyers more choice and should help to slow price growth over the second half of the year. So it's a nice, non-intimidating way of saying new listings are coming online quick, and prices are probably not going to keep going up. With sales leveling off near historically average levels and new listings finally starting to play catch-up, housing markets appear to be settling down, said Sean Cathcart, CREA's senior economist. History suggests the price side of things will respond to this with only a slight lag. Add to the recent Bank of Canada rate hikes, and we can probably expect price growth to moderate in the months ahead, likely still with some degree of upward pressure, but less than in the last 3 months. So it's a very common theme. Both CREA and the Bank of Canada, in his press release, they're both saying, okay, prices are going to level off, but they're still going to grow gradually, or very small growth. I think they're doing this not to alarm people and to panic. Don't worry, your house isn't going to go down. It's still going to go up a little bit. So both very similar predictions. The number of newly listed homes was up 5.9% on a month-over-month basis in June, building on gains of 3.1% in April and 7.6% in May. New listings have gone from a 20-year low in March to closer to, but still below, average heading into the summer. And let's take a look at the chart, one of their charts here, to see what that looks like. And you can see Q2 new listings in Canada, for all of Canada, they've gone up. They're higher than Q1, still relatively low, but they are making upward trends. While we're at it, let's look at the sales activity, because they do have a forecast on that coming up, or that I'm going to bring up now in a minute. And you can see sales have significantly picked up in Q2 compared with the last 3 quarters, still low or just below the 10-year average as previously stated. And here is the market balance. The blue bar graph at the bottom are the months of inventory. It's still at 3.1, so it didn't increase in June. It stayed the same as May, but I'm sure in July we're going to see that months of inventory pick up significantly. And the balance, the number of sales to new listings ratio is headed down very quickly, meaning it's changing from a seller's market into a more balanced market, and we'll see if it heads into a buyer's market at some point. One last thing I just want to point out in their highlights. I don't read their highlights anymore because it's the same stuff in the report. But one thing I wanted to point out was the last line here. The actual, not seasonally adjusted, national sales price posted a 6.7% year-over-year increase in June. So when you're looking at the year over year, it's gone up 6.7%. And this is one of their highlights. They don't usually talk about month over month, but I think it's very important because you want to see what the market is doing month to month, right? Who cares what it was doing compared with last year, unless you're sitting in your house worrying about equity. But as a buyer, you're going to want to know where it's trending right now. And of course, I've compiled this for you. They have their own chart, but I've transfer the data into mine to make it easier to read. And you can see in June, we are headed down, or we did head down in June, and we're down 2.7% or $20,000 from May. We're up that 6.6 I had calculated. They have 6.7 year over year from last June, or 44,000, and we're still down 13.1% from the peak, or 107,000 for the average house in Canada. So just a couple more things I want to point out with this chart while we're still on it. We do have a perfect head and shoulders pattern forming. And when head and shoulders patterns form, it means downside movement. So statistically speaking, with charts, we're going to see some downward movement in the prices, actually a big step down. And anyone that was watching for that dead cat bounce, we did make that bounce. And of course, that's heading down too. So just looking at chart patterns alone, it's very clearly obvious where the market's going. So before I get into the next very interesting chart, it's probably the most interesting chart I've made in a while. I want to get into the CREA forecast, and it's just going to touch on this briefly. They just updated their CREA resale housing market forecast. Actually, they should have called it downgraded it. And this was just with their release on Friday with the statistics. And this is what they had to say. As expected, national home sales came flying out of the gates in April 2023. Buyers who had been sitting on the fence responded to the twin signals of interest rates looking like they were at the top and property values hitting the bottom. With the Bank of Canada unexpectedly ending its pause on rate hikes in June and the hiking again in July, a major source of uncertainty has returned to the housing market. So we went from positive speculation to a major uncertainty, and this is all due to speculation on interest rates and what's going to happen in the future. As a result, CREA has downgraded its forecast for the home sales in 2023 and 2024 compared to its April 2023 outlook, along with the trajectory for prices. That's not to say either are necessarily expected to return to declines on a month-to-month basis, but rather to stabilize or rise at a slower pace than they have been in recent months. So they're pretty much saying, don't worry, guys, prices aren't going to go down. Hopefully not. Maybe they will, but we're hoping they don't go down. Here is the chart for the sales activity, the number of sales, and they have, again, downgraded 2023 and 2024. And if you look at 2023, you have to go back to 2018, which is a pretty slow year in real estate, or even back to like 2011 and 2012 to get those similar sales numbers. So 2023 is going to be a pretty slow year by the looks of it. Okay, now lastly, I want to talk about how speculative the market has been with these interest rate announcements and increases and pauses and whatnot. Usually there's a lag time when the Bank of Canada announces something or rates move. It takes 6 to 12 months. And I showed this chart, this one here. I have the updated one now in a second, but this shows it. You can see here starting on the left, they started to raise rates back in what, '06 or '05 or whenever it was. And of course, they held them for a bit. And then it took a while till 2008 until prices dropped. Same with in the next time they went up in 2010. It took a little bit, and they didn't put them up much in 2010, but it took a little bit, and prices stabilized and even dropped maybe a small amount in 2012 or so. Same with in 2017. 2017, they started raising rates, and during that cycle, prices dropped. They didn't get to the top before prices dropped, but it still took a good 6 to 12 months before they saw that price movement change. And looking at going the other way, when they started dropping rates there on the left, the green arrow, they dropped the rates. And then a little bit later, again, 6 to 12 months, prices started to recover, started to go up. So historically, it makes sense. There's a lag time. It takes time to hit the market, people renewing mortgages, rate holds to expire when people are getting new mortgages. And that's what happens. But lately, looking at this chart, the market instantly reacts to rate announcements. So looking back here, this is just a short-term chart 2 years back. You can see in July 2021, there was no changes. The red numbers are when they changed the rates or increased the rates. And when they're black, there was no change. So you can see there was no changes, and the markets, of course, was taking off and doing well and going up. And as soon as they did that first rate announcement, and it was only 25 basis points, that was actually March 8th or 6th. I think it was the 6th or the 8th of 2022. You can see February was the peak, and things just started going down, and they kept increasing rates. Things kept going down until we got to July 2022. They kept increasing. Market didn't go up, but of course it did continue its downward trend a few months later, right all the way up until the end of the year, until January this year, when the Bank of Canada announced its pause. As soon as they announced its pause at 4.5%, everybody took that as a signal. Let's go out and spend. And as you can see, they kept it at 4.5%. Prices started going up until June, beginning of June. They announced that 25 basis point rate hike again. And right away, the market turned. So just looking at that chart, you can see like the market is not responding to rates. It's reacting. It's speculating on rates. Like the Bank of Canada, he can't even say, I'm going to pause. If he does pause next time, he's going to have to like threaten that we're going to put it up next time, but I'm just going to take a month off here, or a 5-week period, or whatever the time frame is. So it's very speculative and very reactive to those markets or to those interest rate hikes. Now, what happens when these rates actually start to take hold? And this is what the governor has been talking about. He says, I don't want to over tighten, but we wanted to give it a pause to see what would happen. Well, he didn't even get to give it time to give it a pause because everyone jumped back in. So he's in a very tough situation right now. The markets, he can't even wait to see what happens with these rates, because as soon as he opens his mouth, everybody reacts. It's like the stock market. He says, hey, I'm going to raise rates. Boom, the market crashes. And he says, okay, I'm going to stop raising rates. The market takes off. So he doesn't even have the time to see what happens. And long term say, okay, we've had 6 months now, and this is what's happened with these rates at 4.5%. No, because the market's just insane. It's very speculative. They're acting. They're literally treating it like the stock market does, saying, "Hey, in a year from now, the rates are going to be back down, so I might as well buy now because I'll just get a better rate then." Anyway, that's it for this week, and until next time, I'll see you then.